Hello, this is Seewing here. Welcome back once again. And today I'm going to discuss a hypothetical situation. Right now, the mortgage rate, according to the Mortgage News Daily, is 7.12%. Also, at the date of this recording, which is today, is, I believe, 8th of July. Anyway, so I'm going to give you a scenario on my personal thoughts. What the mortgage rate is currently 7%. What if is the mortgage rate going to increase to 8%, which I know is not going to happen. Okay. There's a slim chance the mortgage rate will increase beyond the 7.2. Maybe at the most, I believe, who knows, 7.3, 7.4, because I believe the Federal Reserve will hamper inflation and slowly the mortgage rate should come down a little by the end of this year. By the end of this year, we may see a 6% rate. But let's go through the worst case scenario, right? So with that said, the worst case scenario, in fact, before we go there, let's go over the mortgage rate volatility in this past year. Let's bring back to what's going on. Last year, at the beginning, the first two quarters of last year, 2022, the housing market was still very robust. As you can see the chart right here. In fact, the chart starting for around, even during the summer of last year, July 27, year over year, at that time, the mortgage rate was still at 5.7%. So it's creeping higher and higher. So a lot of buyers, they try to ramp up, they try to close escrow, they try to lock in the rate before the rate continue to go up. And then before you know it, and then August 24th of last year, the mortgage rate started creeping up 5.65%. Then in a space of August, September, October, the next 3 months, the mortgage rate went all the way up to around 7.06%. This psychological shock, this skyrocketing of mortgage rate in a span of 3 months from July, August, September, October have shocked everybody. Psychologically speaking, we were unprepared. American consumers were unprepared for this sudden skyrocketing of mortgage rate. As a result, when the dust was settled, the demand plummeted from the peak of November last year. So you see the plummeting, right? And although the mortgage rate came down a little bit, a lot of people were psychologically impacted by the sudden rise mortgage rate, and the home affordability just decreased dramatically on a historical 40-year basis. So that created some real estate correction, housing prices drop single digit in some markets, double digit in the Western region markets, right? Around 7, 10, even 12% in the last 3 months of 2022. Now, as we begin the year 2023, the mortgage rate were around 6%. And then the consumers at the beginning of this year, they accepted a new normal. Consumers, buyers and sellers in the housing market, what does it mean is they accept the mortgage rate from 6 to 7%. However, the inventory, the locking effect, I'm going to show you. Here's the thing. Right now, let me share with you the other areas. Let me share with you, let me show you a chart, this chart, which is so important. This chart says it all because let me begin with this chart. Of all the homeowners out there, 40% of the U.S. homeowners to this day have no mortgages at all. So they are sitting pretty. However, the remaining people that have mortgages, 9 out of 10 people have mortgages, they have rates below 5%. Furthermore, there are about 25% of the mortgage holders have mortgage rate at 3% or below. So these mortgage holders are controlling the housing market. They are dictating everything. They are manipulating everything. Good way, locked in effect. You all know that. You get this. So right now, even at 7.12%, by the way, interest rate in of itself will not crash the housing market. Other economic factors may, like skyrocketing unemployment or economy goes to the trash can, whatever, or meteor just suddenly strike the earth and the world is coming to an end, whatever anomaly that may happen. Absent that, the mortgage rate in and by itself will not crash the housing market. Right now, even at 7.12%, yes, the entry-level home buyers are almost totally on the sidelines right now as we speak. But I think we are underestimating the potential real estate buyers out there. I'm talking not just primary home buyers, I'm talking about investors. We're talking about foreign investors. We're talking about hedge funds, Wall Street, and the baby boomers. And this group of people are underserved. They are underestimated. We have no way of calculating who are these people that are sitting on the sideline. These people have deep pockets. They could enter this market and just buy with all cash, buy with 40% down payment. They don't care. They do not care about the mortgage rate. All right. So, and 7% right now, that's not going to affect, it's not going to move the needle because the historic low supply of inventory is still ongoing. When you have extremely low historic supply of inventory and the demand is still there, not only we're not going to see a housing crash or even a slight correction, the housing prices have to go up. That's economic 101. When demand exceeds supply, home prices will go up. And it has been going up for the entire year of 2023. We have seen double-digit skyrocketing of housing prices year to date, 2023. Okay. But I wish I can show that chart. But double-digit, 10, 11, 12% across nationwide, although there's no such thing as a housing market. There are some specific local market, especially in the Midwest and South and Southeast, have been consistently going up housing prices for the past years. They have not came down, contrary to what the mainstream media headlines are saying. So having said that, we all know that. Even hearing, we are seeing multiple offers in bidding war, 3 to 5 offers per house. So far this year, even with a high 6% rate, there are still many motivated, qualified buyers out there, primary home buyers and real estate investors as well. And 1/4 of these buyers year to date so far are buying with cash, all cash. They're totally bypassing interest rate volatility. They don't care. Their situation is they have the money. There's a reason why they want to move. Their life situation is such that they could buy a house regardless of the mortgage rate. That's how it is. Okay? Because again, we are unable to track how many buyers out there who are very well versed, who have very deep pockets, who are very wealthy, as the category of people I just shared with you. They like real estate is a core asset, which on a historical basis have achieved a very good level of return. Because fundamentally speaking, people have to live somewhere, and we are in a scarcity. When you have scarcity of a particular product and more people want it, that create a robust asset class increase. Right? I wouldn't panic. The 7% interest rate, if it is continue happening in the next few months, whatever, it's not going to affect the housing market. It's not going to move the needle that much. People will still buy because the inventory is so low. The lock-in effect is so severe. If you look at the trends, I've been reporting that. You look at my past YouTube videos in the past few months. I mean, we're talking new listings are keep on trending downward. This past year, not just this year, this past 12 months, year over year, new listings, pending sales, active listings all have been trending downward for the past 1 year. That will create amazing low amount of inventory. I will show you in case you're not aware of it. This is very troubling. Okay. And here it is. And here it is. Look at this. We are at inventory level, according to Alto's research, at about less than 500,000 sales year to date. And even though we have more inventory that came in our market recently, we are still 50% below the pre-pandemic. Look at 2015, there were 1.2 million homes for sale. In 2015, look at 2019, the pre-pandemic, with almost 1 million homes for sale. Right now, not even at 500,000. All right. So this inventory level is historically low, right? And housing prices, as I already told you, have been trending upwards since February 2023 this year. Look at the skyrocketing of housing prices. Goes to show you that pent-up demand is continuing. I know we are reaching a seasonality situation whereby the second half of any year, due to seasonality, the transactions and sales will come down toward fall. We can see that. So this trending skyrocketing home prices year to date will subside, not all the way down like last year. It will be like something like stabilized down like this, coming down for the rest of the year. So we may see another 2 or 3% appreciation for the rest of the year. But when it's all said and done, all the downturn, all the reduction of prices occur late last year was all but made up so far the first 6 months of this year. So it's a wash. I call it a wash. So let's getting back to the 8%. Look, I look at my local market here in San Francisco Bay Area. We have 1 month supply of inventory. 1 month supply. You know what that does? It means, look at San Jose, for example. I just checked the Western supply inventory so far. I might want to go to produce a video. That's 1 month supply inventory in San Jose, a city of 1 million. So if there are no more new inventory coming to the market, in 1 month, there will be no more houses for sale among 1 million people population in San Jose, California. This is absolutely mind-boggling, right? So even with the mortgage rate increase to 7.5%, the market's not going to crash. Even what if the mortgage rate increase to 8% later on this year, which is, I don't think it's going to happen. But if it does, yes, the demand will continue to plummet, but the supply of inventory will get even worse. Right now, it's like 2.3 months supply inventory nationwide, that is. But if the mortgage rate reaches 7.5% to 8%, the sellers will even have a greater locking effect. We may even have a negative monthly supply inventory, not 2.3 months of supply inventory right now, which is almost at historical low, right? I say it again, at 8% mortgage rate, if it happens, it's not going to crash the market. With very little housing, slight housing correction, and because for locking in something to be greater, people are not put their houses for sale. Why would somebody have a 3% mortgage rate to move up as a move-up buyer to get a mortgage 8%? So the locking effect is even greater if the mortgage rate increases to 7.5% to 8%. And you know what? Because the level of inventory, let's say level or inventory decrease to 1 month supply inventory at mortgage rate of 7.5% to 8%, where you have virtually no homes for sale out there. Therefore, the demand of homes be greater than the lack of supply, even more severe. And 1 month of supply inventory, you will have buyers out there that have the ability. I don't know how and why, but this is my gut feeling. A lot of people in the US still have lots of money, and they will rather dump their excess cash into the housing market to buy this entry level, below medium size, medium price homes in many markets. These are the most high value, desirable real estate assets. For single family home, entry level homes like 200, 300, $400,000. This type of home will be gobbled up like a turkey. And people have money, especially baby boomers and those upscale millennials. That's a category of people that we have not even talked about. They will come out of the sideline. Currently, 7%, 7.5%, 8%, will still have buyers. I would say 1/3 of the buyer will buy with cash. Doesn't matter where. In the Bay Area, with a median price of homes of 1.5 million, I have seen, I'm in the Bay Area for the past 30 years, I have seen buyers that pay all cash, $1.5 million at this moment in the past 3 weeks. Some of my local realtors that I know in the Bay Area, they have experienced such transaction. People have money, if not all cash. A lot of people have 50% down payment. A lot of people have 30% down payment. They do not care about the 7.5 mortgage rate. That is the least of their worries. That's how it is. I know this is something to think this is a really off the wall analysis. This is, I stand by my analysis. I could be wrong. Only time will tell. But I want you to comment below. Hear me. What do you think? Am I off my rocker or what? Okay. Share with me. What are your thoughts? What's going on in your local market? Where are you watching these videos from? I'll be more than happy to reply to your comments. Okay. Yep. Let's brainstorm. All of us in my video YouTube channel community. Let's brainstorm. Okay. And this is not doom and gloom. Okay. I see what I have been through several real estate cycles. I'm a real estate investor by trade, just so you know. I'm not married to any market. I've seen the up and down. I've gone through this 2008 financial crisis, and I survived and thrived above and beyond back then, 15, 20, 16 years ago. Anyway, and I've guided hundreds of real estate investors to buy cash flow properties in many robust housing markets of this week, especially Midwest and South and Southeast. With that in mind, again, I would very much like to hear your thoughts. Comment below. And if you see value in this presentation, please smash the like button and subscribe to the YouTube channel. I want to increase my subscription level so we can have a lot of brainstorming session, so we can help each other, so we can educate each other, inspire each other to achieve real estate wealth, whether you are a primary home buyer or whether you're a real estate investor, which I serve that could be real estate investors in all over the country to buy turnkey investment properties. That's what we do. All right. So subscribe your email to my website below so you can be a free member of our real estate investing community, and you will learn a lot from it for the past 20 years. All right. Thank you for watching. This is Seewing, and I will look forward to hear your comments and interact and brainstorm among our unique, highly educated, rational, logical, smart investment real estate. Thank you so much. Have a nice day. Good to see you. Goodbye.